I think that in the last couple of years, especially after the financial crisis, we've heard the term deleveraging a lot. Banks are just getting deleveraging, and we have lots of stress tests being done, whether in Europe and the US. They just want to see a safer financial and banking system. So, Mr. Kumar, for getting this done, I think also we're having in the region over here some implementation of, let's say, Basel III. I think they want a certain capital ratio for deposits to loans. And do you think that this is going to slow down the financial sector? And how it's going to impact the economy in general if we have all these implemented here?
I think it's absolutely necessary, and many of the banks across this region are gearing up for Basel II, Basel III implementation in full rigor. Coupled with IFRS, and in the case of the US institutions, the US GAAP, etc., there's a lot of convergence happening in terms of both regulations and reporting, especially for the banks that are listed entities, public companies. So I think that's an inevitable transition towards strengthening the financial system, which would mean that some of the more liberal lending practices that had crept in, which led to the crises, both in this region and globally, will fall by the wayside. The banks will be more careful because risk management, certainly compliance, risk management are going to be the key focus areas for many of the banks to be able to address the risk-based capital allocation that Basel III and Basel II currently would require them to do. So that's an inevitable process, and for good reasons. It is being calibrated by the central banks, by the regulators across.
Thank you, panelists, and again, thank you all for joining us in this special event, and hope this panel discussion was benefit for all of you. Thank you.